Hey, everybody, and happy Friday. My name is Gareth Soloway, and welcome to the weekly wrap up here at verifiedinvesting.com. All right, so we're going to delve into the charts, the technicals, the trade setups, but today was a down day on Wall Street, pretty hefty down day. Interestingly enough, we are now in the cycle window. So, again, notice how these crazy things all around the globe are beginning to occur within this cycle window as we come into this period where there should be a change in direction in the market. And it's not to say we can't have an up day. Monday, we could have a relief if de-escalation occurs in the Middle East, but ultimately just watch for these signals that are starting to pop up that change the temperament of investors from being kind of this bullish nonstop mentality to more of a hesitant, then later on towards a bearish mentality. All right, let's get into the charts today as we take a look. This is the S&P 500 or the SPY. Notice we opened lower this morning, then we sold off. Then we had this kind of buy the dip into lunchtime. And then later in the day, the markets have continued lower. We're trading basically at the lows of the day. Now, one thing to kind of keep in mind here is that it makes sense that we should be trading lower into the end of the day. Why? Well, because people are going into a weekend. Investors are going into the weekend with a lot of unknowns. Will this escalate over the weekend? Will Israel continue to attack and Iran to retaliate? And then ultimately, do other parties get drawn in? And so these unknowns on a psychological basis will play tricks or get you more kind of fearful. And that makes it so investors don't want to buy into the weekend. If anything, they want to be sellers into the weekend. Now, again, like I said, if we see de-escalation over the weekend, or if this can kind of concludes itself by Sunday night, we could be looking at a bounce on Monday. If it escalates, then watch out below. We could be in for another big drop. All right, so let's flip over to the daily chart here. Notice again, we have this key trend line right here, this high pivot from this little dip up, dip down and up, this little high pivot up and down. And then look at right there, we came into it again, and the markets are coming back in, down 1.25% on the day. Now, the biggest thing for me is watching the wedge pattern, right? So wedges right here, we can very clearly see that if you connect this low right through here, this breaks that wedge pattern. Now, again, it doesn't mean we can't recapture it, but it starts to increase the probabilities that downside is likely to continue. And now, even if we rally back up into it, this is going to be a multi-layer of resistance. Just above it, we have our all-time high as well. And those factors right there will be a big hurdle for the market to push through. And don't forget, folks, as we get closer to July, July is when the deadline, the 3-month extension on tariffs were given, when Trump kind of postponed those initial tariffs, and then obviously the ones about a month later on China. So we're going to start to, as investors, we start to have to look at that and say, okay, if no deals start getting announced, what starts to happen? Do these tariffs go back to 50, 60, 70, 80% on a lot of these countries? And that is additional risks for the overall market. All right, so let's take a look at a couple other charts here. The dollar today, which had tried to recapture this trend line after breaking below yesterday, we have backed off. And again, the dollar is only up a little. Now, what's interesting about that is that the dollar is usually a safe haven asset. So it is getting a small bid today, but the bid is very minimal for the fear that is engulfing the investing world out there. And that's something I'm just paying attention to, because remember, when Liberation Day occurred, we did see a market that saw the dollar not being used as a safe haven, and the 10-year or the bond market, treasuries, were also not looked at as a safe haven. And that brings me to my next point here. Look at the 10-year yield today. So the 10-year yield initially overnight was lower, which is what you'd expect, right? If money runs to safe haven assets, then it buys treasuries. Buying or demand for treasuries makes yields go down. But instead, the 10-year yield is inching up here. And this, again, by the way, and I want to make sure this isn't a mountain. This is what I would call a breadcrumb, but it's something that, as an investor, that's an informed investor, this is something that I'm paying attention to. Not that this by itself matters a ton yet, But if this continues, this could end up being something major later on. Now, let's turn our attention to oil here. Oil is trading up about 6%. That is far off of its highs in the overnight. Obviously, it got all the way up into the $77 range right here. But look at the downsloping parallel here. And again, for me, I sell into these events. And again, remember, folks, I look at things very much data driven. What's history told us? What is the charts telling us? Well, the chart clearly says that 77 was the high end of the parallel, so price should pull back. When you look historically at oil, when you have these things that go on in the Middle East, oil pops up in the near term and then it tends to fade back down. Now, listen, if there's continued escalation, could it go up in the near term? Sure, it could. But overall, we know that eventually it will calm down, and then oil generally, historically, does pull back. So I like pullback action. I like a short trade on oil from these levels, as long as you calculate in the risk that it could pop a little bit more before it pulls back if there is escalation in the Middle East. All right, a couple other charts here, and I won't forget to go over Bitcoin this morning in the game plan. I did forget to go over Bitcoin, but again, I will go over it today. Gold here continues to rally up. Again, no surprise here. We got above this level and we've turned up, came back to support, and then pushed up on gold. Gold having a solid up $44 day or 1.3%. So gold continues to be very, very strong here. And again, as long as there's uncertainty geopolitically, as long as there's uncertainty about debt, I really don't see how gold, I mean, listen, could gold pull back to 3,000? Sure. I mean, pullbacks occur, but gold to me continues to be, if you have an eye out 6, 12, 18, 24 months, my guess is gold continues to rally up over that period with pullbacks along the way. All right, silver real quick, guys. Again, not much change in silver here. Silver, again, you can see we had a little pullback. Today was basically a pause day, but this is what I'm drawing your attention to. This pullback, to me, is bullish consolidation. The reason it's bullish consolidation, notice this high pivot. We hit it here. We got above it. We consolidated and broke out. And so you can see I've already drawn on the arrows that for me as a technical trader, if we see a pullback into this level, it was resistance, resistance, and resistance. It broke out. This now becomes support. I'm a buyer of silver if it pulls back to about the 34.50 level. Okay. Next up, let's turn our attention to Bitcoin. Then I'll go over a few other things, but I don't want to forget Bitcoin here. Bitcoin, and listen, in all fairness, Bitcoin didn't do a whole lot today. I do think in general, Bitcoin held up better than you would expect with the stock market selling. So maybe there was a little bit of safe haven buying there. But remember, Bitcoin did pull back the last 2 days prior pretty dramatically when the stock market was flat to positive. So just keep that in mind. It kind of seems to all zero out. Notice the low on Bitcoin in the overnight. Where did it go? Right back to kiss this support zone before having a bounce. So now, what does this mean? Well, to me, it basically clearly shows us that we have resistance here, and this is a pretty tight range for Bitcoin at around 112,600, we'll call it. So resistance here, and then you have support here between 102,500 and 100,000. So you're stuck basically in a $10,000 range of consolidation on Bitcoin. And what you're watching for as a Bitcoin chartist, if you will, or a bull or a bear, is you want to see which level breaks. So right now, we were above this. We went up to the high end. Then we came down to the low end. Now we've moved up to the high and back to the low. Which way does it break? Does it break out above here, in which case it probably very quickly goes to 120,000? Or does it break here, in which case it goes to 95 down to about 93,000. That would be your next key support. Now, based on what I'm seeing in the charts, and again, this is going to more of what is it? Is it a risk asset or a safe haven asset? To me, it's still more of a risk asset. So with me being more on the bearish side of the stock market here at these levels, I would tend to favor the downside. But ultimately, let's let the price action tell us. Let's just watch. Which way does it break? Does it break here? Okay, well, then it goes here. Does it break here? Then you're looking at 120,000. All right. Some other key movers and shakers today. The VIX. The VIX did pop about 18% today. We're now back above $20, above 21, in fact, on the VIX. You can clearly see again, by the way, this was April's pop in the VIX. Then it kind of came all the way back down to the 16 to 17 range. Now it's starting to spike. Just remember that the fear going into a weekend, it tends to make the VIX go up going into a weekend. And then if it doesn't, if we don't get, if there is an escalation, the VIX could come in pretty dramatically on Monday if tensions cool or calm down. So again, I always say that because Fridays are weird like that. And the reason why, again, Fridays are strange like that in that way is that, if this was a Tuesday, then you basically have after hours, futures are open overnight, and people can maneuver and big institutions can maneuver. Once you get to Friday, I mean, crypto's open, so crypto can be traded 24/7. But once you get to Friday night, futures close, the stock market after hours closes, and literally investors have to wait until Sunday night into Monday to react to anything. And so it tends to make the fear on a Friday of the unknown go a lot higher than it otherwise might during the week. And that's why, again, you're seeing a decent spike in the VIX here. But again, it's also a cautionary signal that if the escalation comes down, if it de-escalates, then you could see the VIX come in on Monday. A stock here to watch, guys. This is actually one of my favorite shorts going into Monday. This is Oracle. Major trend line from the high in 2021 to the high here in 2024. And look at what we pierced today. This is a very incredible rally. So it was rallying up here. Then earnings came out. It rallied yesterday. And then today, another 8%. And this is a $600 billion company. This should pull back $10 to $15. I would expect a pullback to the even number right here at 200. There's a gap fill, and this should be early in the week. Now, listen, could it push up a little Monday morning? There's always a chance of that, but this is a very extended chart. And if we look at this, look at the RSI. The RSI is hovering at 80, near 89. That's extreme. The other thing to look at here is if we go to our weekly chart, look at this here. You have your high on your RSI here, but look at it's much, much lower. That starts to tell me there's a negative divergence developing here on the Oracle chart. So again, just something to keep in mind. Again, for me, I look at these charts that get way overdone. This one is now today has entered that zone of being insane in terms of a rally, especially for a $600 billion company. I mean, it's not a trillion, but to have this type of rally on a $600 billion, it is definitely getting overdone. And what's interesting too is a lot of analysts maintained their, outperform rating. But even though they raised their targets, a lot of their targets are like 195, 185, 200. Yet the price of Oracle is now at 215 per the close today. So it's above their 12-month price target. And again, in general, that's not a good thing, right? It means that the analysts, they might be still positive on the company, but they basically are saying it's run a little too far. So again, that's one of my top plays for early next week for a pullback on Oracle. And then just looking at some of these other charts, I love showing these charts. Look at the vertical nature of this grind on GE Aerospace. Look at what happens once it broke the wedge. So you have these sharp upsloping wedges. It goes into this key trend line right here. And look at how fast it falls to the downside. Another great example, RCL, Royal Caribbean. This was a 3-factor trend line convergence. Look at this line here, 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 through here. Hits right there, your double top. And then even this upsloping from this high to high and right to there. And then look at price react to the downside. So again, it's all about, for me, all about charting. And this is what Investor Empowerment Day is. You guys can see the banner at the bottom of the screen for Investor Empowerment Day, which is, again, a week from Monday. I'll be live trading. You guys will see my account. I'm going to have the other traders trading with me. We're going to be doing education and all live, all no holes barred, right? But the point being, again, is that the only way I've been able to make it as a trader is by essentially following the charts, shutting off my brain from my emotional decision making and saying, guys, flatly, my emotion is not going to make me money. I've learned that the hard way too. It's about letting the charts tell me. And by the way, the charts aren't always right? They just aren't. I mean, listen, I thought oil would have reversed after a couple days ago when it popped to 70 or so, and here we had another pop. So that's okay because I've learned how to maneuver through that and dollar cost average and start with small positions. But the point being is that when you use charts, you basically become the casino. You're not going to win always, but you do enough trades and your win rate stays high. In trading, I'm able to get it to about an 80% win rate. And that's enough, understanding that 2 trades out of every 10 won't work. You just have to play the long game. Do enough trades using the charts, and you have a winning combination. And that's really what it's all about. So as always, guys, you guys are rock stars for supporting us here. I can't wait to see you all for the Investor Empowerment Day. And again, for me to you, you guys go have a great weekend. Thank you guys so much. I'll see you Monday morning for the game plan. Take care.